what is bootstrapping mode of financing for startup companies? As we discussed, it is like utilizing your own financial resources, your own personal credit line. You can't approach big banks or big lenders here. So that is bootstrapping. An individual is said to be bootstrapping when he attempts to found and build a company from for personal finances or from the operating revenue of the company, right? That is called bootstrapping. You either use your own finances or just plowing back of profit. Whatever profit you earn, you again reinvest in the business. Do not take the profit out of the business. What you should avoid at the early stage is do not incur unnecessary expenses on marketing, expensive office equipment. Don't buy, you can take it on lease, which you really can't afford. Do not spend on wasteful expenditure. That is why big investor don't give you money at early stage. If you get too much money at early stage, then you are likely to indulge into wasteful expenditure. So first you put your own money. When you put your own money, you are more serious, more sincere, more committed, more dedicated, more careful. So that leads to cautious approach. When your own money is involved, you are more cautious. When others people money are involved, you are careless. Own money means you will not incur wasteful expenditure and you will always be on your toes. Then this is another theory question. Write down, what are the important methods in which a startup firm can bootstrap? What are the important methods in which a startup firm can bootstrap? So here we have lot of points which we already know. So I will not take much of your time. Trade credit we have discussed. Build a good reputation with the supplier. Suppliers are the people who will give you credit, which is nothing but indirectly short-term financing of your inventories. Suppliers will be hesitant to provide funds to a newcomer. They normally insist on cash or pay by credit card. Then it is really your skill to convince the supplier that don't worry, we will pay. We have a very well crafted financial plan. We have got orders in hand. If possible, you go and meet the supplier in his office. It's a supplier can be a small businessman. Meet the owner directly. Tell him about your business, about the growth prospects, about your sincerity, integrity. And if you're dealing with big companies, then maybe you can approach the CFO of that company and try to convince him about your financial plan. It may work also depending upon your communication skills. How convincingly you are able to convince the other party that yes, your financial plan has got lot of strength, and if you can receive the raw material or input, you will manufacture the product and it can be sold and it will generate revenue. The owner or the financial officer has to be explained about the business and the need to get the first order on credit in order to launch the venture. So this is very important. When you will also start your business, you will have financial crisis. Supplier will not be interested to lend you or give you credit. Then somehow you have to convince them by whatever means that once we successfully execute this order, not only we will pay you, we'll get the repeat orders and we will again purchase more goods from you. If the supplier is convinced with that idea, then yes, it will work. Next is factoring. already explained to you, so I will just go through it. Factoring means raising money against the sales made to customers. These factors provide 80-90% of the invoice amount as advance. They also provide you services relating to receivable management like bookkeeping, collection, credit worthiness analysis, monitoring. So what you can do as a startup company, don't have too many people only for monitoring the receivable. Maybe you can outsource the receivable management task to the factor for a service, so this will save lot of cost for you. Of course, you will do cost benefit analysis, and it has been found that many times the factor provides services at a cheaper rate than the cost you will incur if you have your own in-house receivable management process and system, right? What about leasing? Very, very important. When you are a startup company, you don't know where you will end up after 1 or 2 years. Do not put capital in fixed assets. So take a office on lease. Nowadays you can take equipments on lease, computers on lease, machine on lease. So when you take the asset on lease, you don't have to invest your capital. Your capital requirement in the initial stage is lower. Plus, if you are a lessee, under the tax law, you will get tax deduction on lease rental paid. Example, you want a photocopy machine, you want a van, automobile. Don't buy a photocopy machine, take in on lease. You want a van for delivery, why you want to buy? Why you want to block 10-15 lakh rupees? You can just take it on lease, pay as you use. Okay, so that will save lot of cost for you.